let's talk about the gold market. It's time for a gold market update. There's been a number of interesting stories that have come out just in the last couple days about the gold market. And honestly, we don't have the official Federal Reserve balance sheet update. That should be out probably tomorrow, sometime tomorrow, maybe late tonight. Normally it comes out on Thursday for what the official balance sheet was, updated after Wednesday. So I'll hold my comments about Jerome Powell's speech for then. But the Federal Reserve is going to be doing rebranding, and it's going to be QE by another name over the next couple months from what it sounds like. And I've spoken to a number of other experts, whether that's Daniel Lacaille and others, Michael Leibowitz, many other people who are market professionals for a long time, and they expect QE in the next couple months. In fact, Daniel Lacaille was saying on Twitter a few hours ago that this is already QE. And he manages money professionally. He teaches. He writes articles for Mises. So he has a very successful track record. So let's talk about the gold market right now. So right now, the gold price is in US dollars. It's barely holding above 1,500. It's at 1,505. And silver is at $17.70 when I'm looking at it right now. And it's been a struggle for the last few weeks for it to hold 1,500. It's been below 1,500, especially when China was closed for the holiday that is their 70-year celebration for the Chinese Communist Party. The Shanghai Gold Exchange was closed. However, what just came, and also you had the options activity, all the options where normally the paper prices are smashed, but the price didn't go much lower than the high 1480s. And the reason in my opinion, is because a lot of people, smart money, are looking at the global macro situation and they are buying physical gold on the dips. Okay, these are your Mark Mobiuses, these are your Jim Biancos. These guys have very wide audience and readership base, especially Jim Bianco, for bond managers, professional money managers, and he's not a gold bug, Jim Bianco, and he is now buying gold on the dips. And Mark Mobius is not a gold bug, and he did an interview, I played it for you guys, a clip of it, in the last 6 weeks. He is buying gold on the dip. And you have Sam Gold, who is a real estate mogul, a billionaire, and earlier this year in January, he was buying gold and gold miners. And he said he's never bought physical gold in his life before, and he said that the gold miners were going to have a big rally, he thought, at some point. So what backs this up is that Bloomberg just put an article out late last night, updated on, actually it was updated again today, and that gold ETFs have posted the longest run in a decade as investors take cover. Citibank has said that bullion will draw more demand, and they see a rally to $1,700 an ounce in US dollars. Some of these investment banks are starting to put higher price targets, but really they're just momentum driven. A lot of their analysis is normally not on fundamentals. It's normally on whatever's trending and momentum, and whatever the chart looks bullish. So the central bank, the investment banks were, when crypto prices were going a lot higher, they were raising price targets on those, and this is just how they do with stocks. They do this with stocks, they do this with crypto, they do this with gold. If a market looks like it has momentum, they start raising the price targets. So I wouldn't take too much heed, I wouldn't take too much respect for the central bank investment research reports in that regard. But according to this story, worldwide holdings in bullion-backed exchange-traded funds have expanded for 17 days in a row, the longest run of inflows since 2009. So this is your larger pools of capital, your generalist investors. These are like high-frequency trading algorithms, trend traders, hedge funds. These guys, instead of buying physical gold and using it for savings and insurance and wealth preservation, they want gold exposure. And they're getting access to GLD and other gold ETFs. Now, we don't know for sure if any of these physical gold ETFs, other than the Sprott Physical Trust, which actually do audits, are actually buying physical gold. They claim to be buying physical gold, but there's a lot of loopholes in the prospectuses. But according to their press releases and the data that's coming out, they are buying physical gold. We wouldn't know for sure without an audit. Trace Meyer, who is a lawyer, did a video about 10 years ago before he got into Bitcoin and cryptocurrencies, and he went through the GLD prospectus and the SLV prospectus. He made a video. You can search it on YouTube. It's got a lot of views on it still. I believe it's still up there. I don't think he took it down. And he shows all the loopholes in GLD. There's a ton of them. So you have smarter money, which is accumulating gold exposure, physical gold, the best gold and silver companies. And I'm as you guys know, again, this is not financial advice, just my opinion. I am a long-term shareholder in Sandstorm Gold. I also own shares of Wheaton Precious Metals. And if the gold and silver price keep going sideways, if this paper price manipulation continues, it doesn't really bother me that much. It doesn't. Because they'll just do more. These companies have, Sandstorm Gold just announced in the last week, they put out a press release. They had a record amount of revenues in Q3 of 2019. So over $25 million for the quarter, despite the gold price not keeping up, not keep going up. So these companies that are the 5 largest precious metals royalty and streaming companies, although now I'm not sure if I would call Osisko Gold Royalty a precious metal royalty and streaming company, because now they bought a gold mine and they're going to expose their shareholders to a ton of extra risk. This is in the, go back and look through my archives and take a look at the lectures in there for mining stock, education, and maintenance capex, and what can go wrong when companies try to build a mine themselves and the mine doesn't come in on time and on budget. There's a surprise maintenance capex bill that wasn't anticipated. So Osisko Gold Royalty has a few really good royalties that are generating enormous amounts of cash flow for them, but now they've exposed their royalty and streaming company shareholders to risks that they should not have exposed their royalty and streaming shareholders to. And I think that's made a lot of them uncomfortable, and that's why the stock has been dumped. So there is a lot of potential for growth, but now the assets are coming under question, and the company is now very vulnerable to a hostile takeover. I wrote about this behind the paywall on my Patreon. I also, so you can go and read that article if you want in depth a couple weeks ago. I also spent over 3 hours finishing yesterday a article on Sandstorm Gold that's over 8 pages long. I think it's about 9 pages, 9.5 pages. It's in depth. It's a update on the company. It's a lot better analysis than the stuff on Seeking Alpha. So it's a treat to the people who are already sticking with me and helping me grow my business. Over on my Patreon, my over 150 Patreon account contributors. And if you need an incentive to sign up, there you go. $5 a month. You can go read the article and you can learn a lot more about the industry and the company and some of the new royalties and streams that will be online for Sandstorm Gold in hopefully the next 6 months or so. There's extensive updates on there. I'm very thorough about this. I spent a lot of extra time going through a lot of the presentations with the companies that Sandstorm Gold's partnered with and other insights into there as well. So there may be in the future, there may be other future article updates like that. I don't know if they're going to be 9 pages, but the company has an extremely bright future, just enormous amounts of free cash flow. The other story that's interesting that came out on Kitco today was by Anna Golubova, that China and Russia have now bought 251 tons of gold this year. So 2 of the biggest gold purchasers this year bought a total of 251 tons of physical gold. The INTL FC Stone reported. I'm not sure what that is. I guess it's an investment bank or a consulting firm. So globally, central banks around the world added nearly 500 tons of gold to their reserves between January and August of 2019, which puts 2019 on the map to be a record year for central bank gold buying. The biggest buyers, aside from China and Russia this year, have been Turkey, Poland, and Kazakhstan, the World Gold Council said at its most recent report. And then O'Connell cited 3 reasons behind increased gold purchases: safety, liquidity, and return. I will add also diversification away from the dollar and other fiat currencies. So you have these stories which are driving the gold market, and why you have central banks outside of the United States, central banks in Asia, central banks in Eastern Europe that are net buyers of physical gold, and instead of net sellers, which they were 10 years ago. And there's you have institutional investors, not everyone, but you have more smart money people starting to buy the dip in gold, starting to buy the dip in the best gold stocks. And then you have other people like other entities like central banks and other institutional investors that are starting to get more gold exposure. And that's why the gold price, when there is paper price manipulations, the gold price doesn't go lower for that long a period of time. And why it seems gold, despite the best efforts of a lot of the manipulators, is hovering still around 1500. And then also the global macro situation, all the problems in the global economy. There's so many. I've talked about them extensively for a very long time. I have tons and tons of videos covering a lot of the different ones. Also, finally, let me talk about some of these gold market manipulation stories, because I love to get into this stuff. It's just freaking nuts, all the stuff that's been coming out. Craig Hemke wrote an article a few weeks ago, September 18th, and he did a lot of digging. So he's Turd Ferguson at TF Metals, so props to him for this. And he found that the abject corruption in the JP Morgan Department of Justice indictment, the Washington banker lawyer revolving door is protecting their own. So by now you've heard, I'll just read the article. By now you've heard of the indictment of 3 key JP Morgan employees and the charges of precious metals market manipulation. Well, he's unearthed a nugget that will leave you speechless. If you've been around for a while, you'll recall his role in 2012 of assisting Andrew Maguire in his quest to end the bank's ongoing gold and silver price manipulation. Though Andy had direct evidence from 2 whistleblowers inside JP Morgan, and though this evidence was officially and legally summarized and submitted to the Commodities Futures Trading Corporation in August of 2012. By the way, the chairman then was Gary Gensler, who Ted Butler thought would be a honest and objective person, because I used to get Ted Butler's newsletters and I totally disagreed with him back then. And the more I looked into Gary Gensler, the more I did not think he would be honest and objective about a silver market manipulation investigation. His background is he was a managing director, I believe, a very high upper management at Goldman Sachs for many years. He also, in the 2016 presidential election, he was Hillary Clinton's head of campaign finance. Another shady thing. And then revolving door, he went to become the CFTC Commodities Future Trading Commissioner. And one other thing, which you won't find unless you do a lot of reading, Jim Rickards, in his newest book is Aftermath, and I'm working on getting him booked. I finished that a couple weeks ago. It's pretty good. Working on getting him booked for another interview about this new book. But his newest book, which is Road to Ruin, which came out, I think, around 2016, Jim Rickards disclosed in there that when Jim Rickards was the head lawyer, the chief counsel for long-term capital management, and he was trying to get LTCM, Long-Term Capital Management, a bailout, that Goldman Sachs and other bankers came in to the office, and Gary Gensler was one of the people that Goldman Sachs sent in, and Jim Rickards alleges in the book that Gary Gensler basically traded on inside information, that he took a look at all the books, all the trades that were non-public information, that were private information from LTCM. He wrote them all down, and Goldman Sachs decided to not bail out Long-Term Capital Management. I believe the Federal Reserve ended up having to bail them out, and I think there was other banks that chipped in. One of the banks that didn't chip in was Bear Stearns. It was either Lehman Brothers or Bear Stearns. I think it might have been Bear Stearns. And so Jim Rickards disclosed in that book that Gary Gensler allegedly wrote down all the trades, and then Goldman Sachs went and took the other sides of the trades, knowing that long-term capital management was going to blow up and get bailed out, so Goldman Sachs could make a profit off of the bleeding and the bailouts from long-term capital management. So he alleges in the book that Gary Gensler was trading for extra money, for profits, for bonuses for himself and for the firm, for Goldman Sachs, on inside information. It's right there in the book. So I don't know how many people knew about that story prior, but it was out there, out in public around the 2016 election. I think the book maybe came out shortly after that. Just crazy stuff. And so let me get back now to this article from Craig Hemke. So the CFTC case, CFTC sat on the case Their official silver manipulation investigation dragged on for 4 years with no end in sight. Then in September 2013, the CFTC suddenly closed the investigation and declared that there was, quote, no viable basis to bring an enforcement action. We all know that was bullshit. We all know that was total BS. We've seen the traders, the metals traders that have come out for spoofing, which is the minimum level of manipulation. There's a lot worse than that. But the spoofing stuff is a good start. The people under oath that got in trouble said that they testified under oath that their bosses taught them how to manipulate gold and silver. So the timing of the silver manipulation investigation ending in September 2013 was suspect because just one day before, Andrew Maguire had appeared on the Kaiser report to disclose the information that the CFTC was seemingly ignoring. They have a link to the interview. Okay, back to the CFTC press release from the day they suddenly closed the investigation. During the investigation, the head of the CFTC's Division of Enforcement was a man named David Meister. In a curious development, Mr. Meister quit the CFTC just 1 week after the silver investigation was closed in 2013, but there were no worries for Mr. Meister as he soon landed on his feet at a law firm of Skadden, Arps, Slate, Meager, and Flum LLP and affiliates. And so now he's bringing it full circle. CNN summary of the Department of Justice indictments from September on Monday. So here's quoting here. Between 2008 and 2016, Smith, Nowak, and Jordan, these are the 3 JP Morgan traders who did the spoofing manipulation, allegedly manipulated prices of gold, silver, platinum, and palladium futures traded on the New York Mercantile Exchange and the CME Commodity Exchange. Smith, Nowak, Jordan, and their co-conspirators allegedly engaged in a complex scheme to trade precious metals in a way that negatively affected the natural balance of supply and demand. The William F. Sweeney Jr., FBI Assistant Director in charge of the FBI's New York field office, said in a statement, Nowak's lawyer, guess who Nowak's lawyer was? David Meister. So he went from investigating JP Morgan and the other Wall Street investment banks supposedly investigating JP Morgan and the other Wall Street investment banks that were manipulating gold and silver. He left and now he's defending them. You can't make this stuff up. And then I think there was another guy that was an LBMA board member too. So Nowak's lawyer is David Meister. So the trader, the JP Morgan trader, one of the traders that is busted for gold and silver spoofing manipulation is now David Meister, formerly of the CFTC. Crazy stuff, guys. Abject corruption, revolving door of corruption between the CFTC, the LBMA, lobbying firms and law firms here in the Washington, D.C. and New York City metro area. Normally, a lot of these corporate law firms that cater to the Wall Street investment banks have multiple offices in New York City and D.C., and then also with the Wall Street investment banks. It's a revolving door of corruption. And making sure no one goes to, hardly anyone goes to prison, or it's a small amount. If you want to read more about this or dig more into this, there's a number of articles about this. But one of the guys was an LBMA board member too. And I believe the Chinese have investment bankers on the LBMA board. So the Chinese are aware of games on the LBMA too. I believe there's Chinese bankers on the LBMA board now. You can't make this stuff up. Oh, thank you, Tarkinas, for the super chat. I appreciate it. So, yes, I think Ted Butler's a smart guy, but his trust, his faith in Gary Gensler was completely and totally misplaced. He should have done more digging in the background. There were rumors about him while he was head of the CFTC. Let's just put it that way. But the manipulation doesn't matter a whole bunch because they can't move the price too much lower. If they move the paper price too much lower, the miners are in trouble again. So the miners, margin-wise, are doing okay now because oil prices haven't risen and gold and silver prices are staying up. So margins are okay for now. The problem is that miners have been in a bear market for so long that 6 months of low oil prices and pretty high metals prices isn't going to fix things. And remember what I covered Go back and watch my video from a couple weeks ago, Insights from the 2019 Denver Gold Forum, because it's an exclusive conference and the average person can't go there. So I had to talk to a couple of my contacts who actually were able to attend. It's by, I believe, invitation only. So either you're a gold company or you're a mining journalist, and there's very few others that are allowed to attend. Maybe a high net worth hedge fund managers or institutional investors. There's not a lot of regular people that are allowed to go. And from what I was gathering there with the insights, that even though we're at higher metals prices than 6 months ago, the capital to rate, the ability for miners, producing miners, to raise capital is not there. To my knowledge, and I check on this every week or two, I have not seen another financing of $100 million or more for a producing mining company, other than the botched one with New Gold that I talked about a month and a half, 2 months ago. The New Gold one, $50 million of the bought deal shares did not sell immediately. They took 2 weeks, and the Canadian investment bankers, there was a syndicate of a few investment banks, I think 3 Canadian investment banks. They were pretty pissed off and pretty spooked that they could not get the shares sold. So they were able to get the shares sold eventually. They didn't lose money selling the shares. They broke even. But the fact that it took them so long has everyone spooked. And it shows that there is institutional money interested in gold, but it's not financing producing miners. The money is going into physical gold. The money is going into gold mining ETFs. And the money is going, which benefits some of the larger miners first with higher market caps, but it doesn't put money necessarily into their treasury directly, because they're not able to do massive financings. And then it also, with the increased into institutional interest in gold, it benefits the largest precious metals royalty and streaming companies, except for Osisko Gold Royalty, because now Osisko seems to have, despite Osisko having potentially a lot of assets and a lot of growth, they have a lot more risk. So the institutional investors that want the business model for royalty and streaming companies to protect them from maintenance capex risk, all that extra mining risk, all the extra costs that come with building and maintaining a mine, making sure it comes in on time and on budget, and the literally dozens and dozens of problems that can go wrong at the mine, a royalty and streaming company is protected from a lot of those risks. They don't get a bill when a mining company has a problem in a mine. The royalty and streaming company does not get a bill saying, here, you need to pay another $200 million, $300 million, $400 million. So the gold market may go sideways for a little bit longer, but the global macro problems are getting worse beneath the surface. There's a lot of crazy stuff, a lot of financial professionals that I pay attention to, that I've interviewed in the last couple months, or interviewed in the archives on my channel over the years. They are predicting now that QE will start in the next 2 to 4 months for the US, because there's that many problems. So it looks like as of now that the Fed is going to go. Jerome Powell's already talking about balance sheet expansion, saying that it's not QE, but they're going to implement a permanent repo facility, and then it's going to be a QE program, or it's not going to be called QE, but it's going to be balance sheet expansion. And we won't know for sure what they're going to buy without audits. But they'll probably be buying U.S. Treasuries and mortgage-backed securities. And that leads me tomorrow, unless I do a balance sheet update show, I have another real estate show that I can do. There's all these crazy stories that are coming out in just the last month or two, that the large Wall Street banks are now trying to extend and grow the real estate bubble here in the US. A lot of crazy stories. Some really stupefying stuff. Like, we're talking almost ninja loans bad. We're talking starting to increase mortgage-backed security derivatives and other nonsense again. That's how desperate the banks are to try to keep real estate prices high. But there's a lot of anecdotal evidence that in local real estate markets, I'll talk about this on the show, that in specific real estate markets, the amount of speculative capital going into them in the United States in specific cities is starting to calm down. That the speculative capital is gone. Well, Daniel Lacaille agrees with me. I pay attention to a bunch of different experts. If you just want to pay attention to Lewis, you can just pay attention to Lewis. I pay attention to literally dozens of experts. And I cite sources. In most of my videos, there's 4 or 5 sources below the video. And the people whose work I'm paying attention to, that's what they're saying. Look, I respect Lewis, but we're going to have to agree to disagree. This is an excellent question by Tarkinas, and thank you again for the super chat. I appreciate it. Won't QE be bad for gold as investors move to more riskier assets? No. What riskier assets are you saying? In an inflationary environment, Tarkinas, a devalued fiat currency can lift all asset prices. There's smart money already going into gold anticipating QE. Mark Mobius is not a gold bug, and Mark Mobius is buying gold on all dips now. He said the central banks are printing, not just the US, he said all the central banks are all printing money like crazy and doing very stupid things. If you go back and listen to that Mark Mobius interview from about a month and a half ago, he sounded like a gold bug, and I can tell you from paying attention to his work for years, he's not a gold bug. RJ says every asset class is manipulated, yes, by one entity or another. Sometimes it's a combination of governments working together. Sometimes it's one government or central bank on its own. And for example, in my opinion, I think the Saudis wanted to try to bankrupt the U.S. shale oil companies. And they tried doing that really extensively from 2013 to 2016. And they went into debt, they burned through a lot of their reserves, and they had a lot of financial problems because they were adamant that they could bankrupt the shale companies if they got oil below 65, and they didn't bankrupt nearly as many shale oil companies as they thought, for a number of reasons. And then I think personally now, I think the Chinese government, my educated guess is that the Chinese government is manipulating Bitcoin and the cryptocurrencies down as they roll out. As the Chinese government prepares to roll out its government cryptocurrency. Yeah, I'm well aware of the Gold Antitrust Action Committee. I've interviewed actually all those guys in the archives. I've interviewed all of them except for Adrian Douglas. And he unfortunately passed away a number of years ago. Actually, Little John, I'm not sure if you're aware of this, but if manipulation was so successful, then why is gold at 1,500 now? Why didn't they cap it at 1,000? Why didn't they cap silver at 10 or below? So if the manipulation was 100% successful all the time, why weren't they able to successfully cap gold at $1,000 or less permanently? Why weren't they able to successfully cap silver at, well, gold at 1,000 and silver at 10? And the answer is simple. If you manipulate a price like that, it's a version of a price control. It creates shortages of physical metal. And especially for silver, where it's needed for industrial purposes, the metal has to be delivered, the metal is needed. So the price has to rise or the supply dries up. And yes, there's a lot of above ground gold. There's an enormous amount of above ground gold. However, a lot of that above ground gold is not for sale. At anywhere near current market prices, some of that above ground gold, a good amount of it probably is not available for sale at any price. So the paper price manipulation, they have to allow metals prices to go up or otherwise all the miners go bankrupt. We're very close. About 18 months ago, we were very, very close to a lot of the gold and silver miners going bankrupt. If we did not have, when the metals prices went up to 1,200, it was a little bit better. When they stayed at 1,200, gold prices for a while, the miners were in trouble again, especially when oil prices rallied. And when silver got back down below 15, the silver miners were in deep, deep trouble. There was, from what I was hearing from some of the silver miners, some of the miners were 6 months or less away from bankruptcy. Did I say gold will not go up? You're annoying, bro. You can take a timeout. You've been saying the same nonsense on my channel for 6 months or something. I've interviewed all the people whose work you're cited. I've interviewed them more than once in the archives of my channel. The metal has to be delivered, especially physical gold and silver for industry, for industrial purposes. Okay, well, I think that's enough for right now. I want to thank everyone for listening, and I'll keep coming out with unique content. We'll see if I get a balance sheet update either later tonight or tomorrow for the Federal Reserve, and there may be a story on that. If there's not a balance sheet update and there's nothing to report on tomorrow, the show tomorrow as of now will be either a real estate show or how China's middle class is starting to panic. There's been an extensive article that came out recently about how China's middle class is really starting to panic, like big time panic, and it's going into extensive detail. And I just want to thank my over 150 now Patreon account contributors, my dozen or so monthly PayPal contributors, and the people who chip in once in a while who donate through my website. Either there's also crypto donation links, but I'm not pumping crypto, Bill Holter. People want to tip through crypto, want to save some money, don't want to help out PayPal or Patreon. There's crypto. I may also take physical gold and silver donations. We'll see. I have to think about that. And if you want to read that Sandstorm Gold article, it is extensive. If you're a Patreon account contributor, log into your Patreon account, and you should be able to read the article there. If you're not a Patreon account contributor, and you want to read that Sandstorm Gold extensive Sandstorm Gold article, and also the update on Osisko Gold Royalty, which is for Patreon account contributors only from a couple weeks ago, can just, if you're not a Patreon account contributor, there's now incentives for you to go and sign up for $5 a month, and you have 2 really good articles, I think, to read. Occasionally I will update on Bitcoin. Matthias, I actually talked about it. A little bit. Right now, Bitcoin is being Bitcoin and all the cryptocurrencies are intentionally being manipulated, in my opinion, by the Chinese government, because the Chinese government is rolling out their government crypto, so they don't want any of their citizens hodling, and they want to discourage everyone in China from buying cryptocurrency to get out of their government cryptocurrency. That's my opinion. Yeah, that guy was incredibly annoying. He can listen and put a thumbs down all he wants. Dude, I've forgotten more than he knows. He's incredibly rude. It was just escalating more rude. I would answer his questions politely over the time, and it's just gotten more and more rude. Okay, well, thank you everyone for your time, and I'm going to keep grinding with the unique content.